Welcome to the Dr. Sal Adoni Show. Fans of Dr. Sal Adoni call him the great genius, a figure that Nostradamus wrote about. His theories in math and astrophysics are used by government agencies. His theory E has proven Newton and Einstein are wrong. His prime algorithm is used by the NSA. His planetary distance formula is used by NASA to find new planets. His EOE theory is used by the USGS in earthquake prediction modeling. He founded 2 different think tanks, including Helix Q, the artificial intelligence think tank. Dr. Adoni is the founder of the cryptocurrency BizBytes. Dr. Adoni is also the founder of the One Media Network. One Media produces dozens of podcast shows for the iPodcast network.
This is Dr. Saul Adoni. Welcome to another segment of the Dr. Saul Adoni Show. You can find more segments at sauladoni.com and ipodcast.org. Sauladoni.com is SOLADONI.com.
This is Dr. Saul Adoni. Today I'm going to be speaking about cryptocurrencies and also Bitcoin. Over 5 years ago I wrote a book about Bitcoin. It was titled CIA Project Bitcoin. And at ipodcast.org, where this site emanates from, you can see a link to this book. And in this book I reveal many things about Bitcoin when very few people were into Bitcoin. I revealed that the founder, or alleged founder of Bitcoin, Satoshi Nakamoto, his name in Japanese loosely translates as Center of Intelligence or Central Intelligence. I pointed out that the encryption used in the white paper was Kolbetz's curve theory. And I pointed out that Neil Kolbetz has been an alleged NSA spook since the 1960s, when he was a poor kid who suddenly got enough money to travel abroad and visit Russia and hang out over in Russia as an encryption expert. The other things that I discussed in my book was that Bitcoin in the future would have many problems because of how weak the system would become based on volume. And I also explained that the idea of a permanent ledger tracking every transaction forever was laughable. If you understand big data and the needs of big data to even track one transaction as far as how many bits of data it would require, the idea that anyone was considering Bitcoin for a global currency, doing millions if not billions of transactions a day, was laughable. Sure enough, as the coin progressed in popularity, the transaction speed slowed down greatly. A lot of transactions stacked up. Transaction fees went through the roof, and the overall network became very slow, as I had predicted. Yet, as I also predicted, the coin kept increasing in value. I had explained in my book that there was a lot of theoretical highs that this coin could reach before it basically all came crashing down like a house of cards when people realized it was a toy. It couldn't run a global currency. So that's my experience with Bitcoin. I've been writing about the problems inherent in the code and how it was developed most likely inside an NSA think tank using NSA encryption, and that is why the founder of Bitcoin, or alleged founder, Satoshi Nakamoto, has never been seen, never been in a face-to-face meeting with anyone involved in Bitcoin. It's a complete operation run by the NSA to do one thing: track drug money, track terrorists, and track underground currency. If you think Bitcoin is anonymous, try to cash out. Go join a exchange in the United States like Coinbase and see how much information you have to give them before you can put your Bitcoins into their network and liquidate them. This is anything but an anonymous currency. In fact, it's the ultimate control of a currency to know where every coin has been spent since the beginning. You hear a lot of people now speaking about Bitcoin as a store of value. Well, a store of value doesn't lose 85% of its value in a few months, as was done recently by Bitcoin, and as it has done throughout its relatively short history, going back around 10 or so years. So constantly Bitcoin gets hyped, it goes up high in value, then it loses 80-85% of its value, it crashes. Then the fool's gold parade starts all over. Some new addicts to the concept of Bitcoin get involved, and the coin goes spiraling upwards again. Well, the coin will never be a global currency. Right now, the value is again spiraling upwards, as it has in the past few months. Various factors are behind this recent climb. Some of it is just short squeeze plays, where people who have shorted the currency have to buy to cover their positions, and when that happens, the coin has a vertical price jump, as we're seeing right now. Another thing is, a lot of people knew they'd be getting major news about the so-called Flexa outroll, trying to get mainstream marketing or mainstream retail companies into using or accepting Bitcoin. Now, this isn't the first time that retail has tried to accept Bitcoin, and what other past retailers have found out, no one uses Bitcoin to buy stuff, period. The people who are into Bitcoin are into it for one thing: greed. They think that since there's only 21 million coins, that the upward potential is astronomical. So Bitcoin is a speculation coin. It's not a currency coin. And if you really understand Bitcoin, you realize it will never be a currency, and it's a very weak store of value. The reason that it is a bad store of value is it has no use. In other words, it's not like gold or platinum that can be used in industry or even jewelry. It's just a digital toy that some tech people think has value inherent in it. Well, the value that's inherent in Bitcoin is just like the old tulip craze hundreds of years ago, where an economy was based on the rarity of tulips in Holland. And when they started importing tulips, all of a sudden the tulip crash happened, and they realized tulips were a good thing to base an economy on. So it's not a commodity. It's not something that's rare, other than there being 21 million of these coins. Think of Bitcoins like a Mickey Mantle 1952 baseball card. Okay, well, the rare ones have excellent condition, but a poor condition card still has some value because it's a sought after collectible. Well, that's basically what Bitcoin is. It's a collectible, and the collectors are often mega million or even billionaire tech players who perceive value in an alleged currency that isn't a currency. Okay, it's like collecting rare baseball cards, only there's 21 million of this one instead of being a handful of very well conditioned Mantle rookie cards from the 52 Tops set. Okay, so the mind of the investors who are chasing Bitcoin revolves around one thing. There's only 21 million of them. Well, at this stage, the public ledger of Bitcoin is over 200 gigabytes of data. Now, to give you an idea how big 200 gigabyte of data is, if you're on a laptop, you probably don't have more than 16 gigabyte. You might have 8 gigabyte of memory. Your phone doesn't have that much memory that you use, your smartphone. So the type of computer that you need to start moving around 200 gigabyte is a memory intensive machine. And the way Bitcoin was designed with the change to 1 million blocks, you could only fit 50 gigabytes of new blocks into the ledger a year. And for the past 3 years, that ledger has grown at its maximum capacity, which is 50 gigabytes. And that means that if any type of retail adoption is done by, say, Starbucks or any other inexpensive transaction company where you have millions of potential transactions a day, the Bitcoin ledger just is not built to handle these types of amounts, which would be millions and millions of transactions a day. It struggles when it gets around 300, 400,000 transactions. So, people are talking about Lightning. Well, Lightning isn't Bitcoin, okay? It's not in the ledger. It's run off block. So, it's not real Bitcoin. So, it's a fake Bitcoin. And it's only as good as the people maintaining those offshoots. So there could be many, many Lightning networks, okay, which could be relatively fast, but the Lightning networks are not real Bitcoin. It's off block. So that's another problem with Bitcoin. Now, if the size of the blocks are eventually opened up to where a block could become 10 megabyte or even 100 megabyte or even a gigabyte of data, okay, well, the 50 gigabyte a year throttle that's on the network right now would disappear, and all of a sudden the ledger could be growing into terabytes every year, if not petabytes. So when that happens, the people who will be doing the mining or keeping the ledger will become very few. So you're going to have a centralized mining network once the blocks are opened up, so you could do major amounts of transactions to accommodate, Starbucks or McDonald's or whoever else is getting into this Flexa network. So these are the problems with Bitcoin. They're manyfold, and the idea that every transaction forever needs to be publicly maintained is just a joke. That's not how you do accounting. Companies that have moved around big data for decades, like Visa and MasterCard, they all do posting. I've been involved since the middle 70s as a little kid, developing accounting softwares for, at the time, mini mainframes before personal computers even existed. The whole 1980s I spent doing accounting software for my company, creating office applications for the legal, medical, automotive industries. So I understand databases, I understand transaction needs, and Bitcoin and the public ledger, that's the death of the network. trying to maintain every transaction forever just overloads the capabilities of any type of system trying to track such a large amount of big data. Now, there are other cryptocurrencies, and the problem with every crypto 1.0 company is they're all tied in some way to the value of Bitcoin. So everything is being judged against Bitcoin, and when Bitcoin becomes worthless, all the other currencies become worthless. So you have to have a crypto 2.0 currency that's not tied to anything other than its own value. If you're in a speculative 2.0 crypto type coin, then yeah, there's going to be growth in value of that coin because it's a speculative coin. I'm involved with a real global currency crypto project that's tied to the US dollar. Does instant transactions, no problem. There's no transaction fees for merchants, and it's being developed to have merchants embrace it, and the consumers are enticed to use this new type of currency by having Groupon level type deals to get in. So they get $100 worth of this new cryptocurrency for only $50, and the merchants take that $50 investment of consumers and accept it as being worth $100 in the currency. And then the merchants have all types of ways to spend the currency within the network. So that's how that project is being developed. It's no speculation whatsoever. It's just if you want to purchase something, you can use a merchant who's in the network and save basically 50% as you trade in your old fiat or old crypto 1.0 coins to get this new crypto 2.0 coin. So that's called BizBytes. Anyway, I don't have an axe to grind with Bitcoin. When it first came out, I was happy to take Bitcoin for various things that I was involved with on the net. And then there came a point where I had to do due diligence on it to see exactly what this thing was. And when I started looking at the encryption that was used and meaning of the names and who was involved, I realized it was a NSA plot. So I wrote a book about it, exposing how the NSA pointed to the CIA developing the program as a joke. I mean, that's their trademark. You know, the NSA does it and they point to other groups to make you think the other groups did it. So in this case, they pointed to the Center of Intelligence, CIA. Satoshi Nakamoto in Japanese. So you can believe what you want, people. Bitcoin, in the long run, is a dead horse. It has no value. It's a waste of energy. It takes the equivalent of the usage of the entire country of Ireland in one day to run the Bitcoin network. So that's how much electricity is being used to do the mathematical hoop jumping that the miners have to do to create a new block. So it's a big waste of energy. It has no intrinsic value other than a group of people are saying it has value as a digital type of currency. Well, in my opinion, it has no real long-term value. And as it got close to 20,000, that's when I said in the end of 2017 that, you know, the game was over. This joke's gone on long enough. It'll be 10,000 in a couple months. Well, 2 weeks later, it hit 10,000. 2 months later, it was 10,000. Then I said it would go down to 5,000. A couple weeks later, it was down to 5,000. Then I said it would go down to 1,000. A couple months later, it broke through 3,000. It was trading in the high 2,000s, and then it pretty much hung around 3,000 for a while. So to me, the floor is still around 1,000. We have a spike going on right now. In the history of Bitcoin, you often have spikes that go up and down as fast as the history of Bitcoin is, meaning that the highs are very quick and the lows are even quicker. So what takes a few weeks or months to build up can be gone in a couple days, if not a couple minutes. So beware, people. If you're thinking about getting into Bitcoin, I wouldn't go near it. If you've been in it for a long time, well, you missed your big opportunity to sell when it was around $20,000. How high will this current bubble go? Well, no one can really say for sure, but all I know is I'm not participating in any way in Bitcoin. I have zero interest in this coin now. This was Saul Adoni. Have a great day.
To listen to more podcasts from Dr. Saul Adoni, you can visit sauladoni.com or ipodcast.org.